Hi, Assalamualaikum. My name is Nasha and I will explain about the statements of financial performance and statement financial position. Let's start with Petronas' operational performance from 2019 to 2023. Despite facing challenges such as global economic downturn triggered by the COVID-19 pandemic in 2020, Petronas demonstrated resilience. The company constantly generated substantial net cash flow from its core operation, reflecting strong operational performance and adaptability in navigating market fluctuation. Now, we look at the Petronas investment activities during the same period. From 2019 to 2023, Petronas committed to a significant investment in infrastructure and technology. This investment was crucial for enhancing operational efficiency and capabilities, ensuring the company's readiness to adopt evolving industry demand despite economic uncertainties and market fluctuations. Now, let's examine the financing activities Petronas adopted, a prudent approach to managing its debt obligation while prioritizing sustainable shareholder returns. The company's balanced approach to financing supported strategic growth initiatives without compromising financial stability. This includes careful management of debt level and effective utilization of equity financing to fund operational expansion and strategic investment. Petronas has several strengths, including robust operational cash flow strategy, investment in infrastructure and technology, and effective cost management practices. However, the company also faces challenges such as substantial capital expenditure required to sustain growth initiatives, vulnerability to fluctuation in global oil prices, and the ongoing management of debt levels. To strengthen its financial position, Petronas should enhance cash flow management through optimized working capital strategies. Diversify revenue stream beyond traditional oil and gas sectors, embrace sustainability initiatives, and maintain financial flexibility through a balanced mix of debt and equity financing strategies. These steps will help Petronas navigate changing market conditions and sustain its competitive advantage in the global energy market. Next is common size financial statement. Common size financial statement express each line items as a percentage or base figure, providing a clear view of the company's financial structure and performance over time. For Petronas, we will look at the common size income statement and the balance sheet from 2019 to 2023. Let's start with the income statement. The common size income statement allows us to see the proportion of revenue allocated to various expenses and profit. From 2019 to 2023, Petronas has managed to maintain a stable gross profit margin, indicating efficient cost management. However, fluctuation in operating income and net profit margin reflect the impact of global oil price volatility and economic uncertainties. Next, we look at the balance sheet. The common size of balance sheet highlights the company asset structure and financial stability. Petronas has constantly maintained a strong asset base with significant investment in infrastructure and technology. Proportion of equity and liabilities indicate a balanced capital structure, ensuring financial resilience. Analyzing key financial ratios derived from the common size statement provide further insight into Petronas' performance. For instance, the current ratio and quick ratio indicate liquidity, while the debt to equity ratio reflect financial leverage. Petronas has demonstrated strong liquidity and management leverage, positioning to well navigate market challenges. Petronas has undertaken several strategic initiatives to enhance its operational efficiency and market position. Significant investment in renewable energy, technology and investment, and global expansion have been crucial for sustaining growth. The company's commitment to sustainability and innovation is evident in its strategy initiative.
Hello everyone, and welcome to today's presentation on the index number trend analysis of our financial statement from 2019 to 2023. So my name is Rashid Nazifa binti Azman. In this video, we will explore key financial metrics such as revenue, gross profit, operating profit, and net profit over the past 5 years. So let's dive in. So starting with 2019, the company recorded a total revenue of 240.3 billion. The cost of revenue was 155.9 billion, leading to a gross profit of 84.3 billion. Operating profit stood at 59.7 billion, while the net profit for the year was 40.5 billion. So in 2020, our revenue experienced a decline totaling 178.7 billion. Despite the lower revenue, the cost of revenue also decreased to 135.0 billion, resulting in a gross profit of 43.8 billion. The operating profit was impacted significantly, showing a loss of 8.5 million. However, our net profit managed to stay positive at 8.7 billion. So, in 2021, the financial performance improved, and with revenue increasing to 248 billion. The cost of revenue rose to 158.6 billion, resulting in a gross profit of 89.3 billion. We saw a significant recovery in operating profit, reaching 72.4 billion, and the net profit for the year was the 48.6 billion. Next, continuing the positive trend in 2022, we saw our revenue climb to 330 billion. The cost of revenue was 175.5 billion, leading to a gross profit of 154.5 billion. Operating profit for the year was 136 billion, and our net profit increased to 101.6 billion. Finally, in 2023, our revenue was 300.8 billion. The cost of revenue was 182.5 billion, resulting in a gross profit of 123.3 billion. Operating profit stood at 98.1 billion, and the net profit for the year was 80.7 billion. So to summarize, over the past 5 years, our company has seen fluctuation in revenue and profitability. While 2020 posed significantly challenge, we demonstrated resilience and strong recovery in subsequent years. The focus on operational efficiencies and strategy initiative has enabled us to improve our financial performance steadily.
Assalamualaikum, I'm Siti Norashikin and will be explaining about the ratios calculation. The first one is liquidity ratios. The current ratio is consistent at around 2.8 to 2.97, which indicates good liquidity. The acid test ratio showing strong liquidity, mostly at above 2.6. And for the cash position in 2022 is decreasing almost at around 40 as compared to 2019. However, since 2022 until 2023, it remains at around 77.12. Next, I will be explaining about solvency ratios. The debt ratio is suggesting an improvement in solvency when the ratio decreased significantly from 2.97 to around 0.30. For the debt to equity ratio, also showing decrement, indicating good balance between debt and equity. The last one, the times interest earned, however, remain unchanged at negative rates, vindicating challenge to overcome their interest expenses.
Hi, Assalamualaikum. I am Hidayatul Shuhaida. I'm going to present about efficiency ratios. Efficiency ratios are financial metrics used to assess how well a company utilizes its assets and resources to generate revenue or profit. These ratios are crucial for evaluating operational performance and can provide insights into a company's productivity, profitability, and overall efficiency. So, if you can see here, for the cash turnover ratio, you can see higher ratio in 2022 and 2023, which indicates that Petronas is generating more sales revenue for each unit of cash it holds. This could be due to more efficient cash management, effective working capital management, or improved sale performance. Meanwhile, a lower ratio in 2020, a lower cash turnover ratio compared to other years, might indicate either a decrease in sale relative to the cash held or inefficient use of cash resources during the year. So, in summary, Petronas cash turnover ratio data shows varying levels of efficiency in cash utilization over the years, with significant improvement from 2019 to 2022, followed by a slight decrease in 2023. This analysis helps the stakeholders to understand how effectively Petronas is managing its cash resources to generate sales revenue during the respective periods. Next, we move to fixed asset turnover ratio. There is a significant increase in the fixed asset turnover ratio from 2019 to 2022. This suggests that Petronas became more efficient in generating sales revenue relative to its investment in fixed assets during its periods. And for the ratio decreases slightly from 2020 to 2023. This indicates a potential slowdown in the efficiency of generating sales from fixed assets compared to the previous year, though it's still higher than 2019 and 2020. So in conclusion, Petronas fixed asset turnover ratio data indicates fluctuations over the year with a notable improvement from 2019 to 2022, followed by a slight decrease in 2023. This analysis provides insights into how effectively Petronas is leveraging its investment in fixed asset to generate sales revenue, which is crucial for assessing operational efficiency and resource management strategies. Then for the next ratios, for the total asset turnover, there is a noticeable increase in the total asset turnover ratio from 2019 to 2022. This suggests that Petronas improved its efficiency in generating sales revenue relative to its total assets during this period. So the ratio decreases slightly from 2022 to 2023. This indicates a potential slowdown in the efficiency of generating sales from total assets compared to the previous year, though it's still higher than 2029 and 2020. So Petronas total asset turnover ratio data indicates variability over the years, with significant improvement from 2019 to 2022, followed by a slight decrease in 2023. This analysis provides insights into how effectively Petronas is generating sales revenue relative to its total asset base, which is crucial for evaluating operational efficiency and asset management strategies. So for the next slides, I will explain about profitability ratios. Profitability ratios are financial metrics used to assess a company's ability to generate earnings relative to its resources, operations, and investments. These ratios provide crucial insights into how efficiently a company is using its assets and managing its expenses to generate profits. So let's take a look in the return on assets ratio. There is a significant increase in the return on assets ratios from 2019 to 2022. This indicates that Petronas become more efficient in generating profits relative to its total assets during this period. The ratio decreases slightly from 2022 to 2023. This suggests a potential decrease in profitability relative to assets, although the ratio remains higher than in 2019, 2020 and 2021. So, in conclusion, Petronas return on assets ratio data indicates a notable improvement in profitability relative to its asset base from 2019 to 2022, followed by a slight decrease in 2023. This analysis provides insights into how effectively Petronas is utilizing its assets to generate profits, which is crucial for evaluating financial performance and strategic decisions. Next, gross profit margin ratio. So there is a steady increase in the gross profit margin ratio from 2019 to 2022. This indicates that Petronas improved its ability to generate gross profit relative to its net sales during this period. Meanwhile, the ratio remains relatively stable from 2020 to 2023. This suggests that Petronas maintained its gross profit margin at high level from the previous year. So, in summary, Petronas gross profit margin ratio data indicates a positive trend from 2019 to 2022 with stable performance in 2023. This analysis provides insights into Petronas profitability from its primary business activities, highlighting its ability to manage costs and generate profits from sales. So next we move to the net profit margin ratio. There is a clear improvement in the net profit margin ratio from year 2019 to 2023. This indicates that Petronas has become more profitable over this year relative to its sales revenue. In 2020, if you can see there, Petronas had a negative net profit margin, indicating a loss. This could be attributed to various factors such as economic downturn, one-time expenses or operational challenges. And if you can remember, it's MCO time in the COVID-19. So, from 2021 onward, the net profit margin ratio shows steady growth, indicating improved profitability and operational efficiency. So, in conclusion, Petronas net profit margin ratio data indicates a recovery from a loss in 2020 to positive and improving profitability in subsequent years. This analysis provides insights into Petronas' ability to generate profits from its operations, which is crucial for evaluating financial performance and sustainability. Thank you.